Welcome to Delta Code. We are going to discuss all the earnings that are happening this week for companies that we care about, largely SaaS companies, some electric car manufacturers, maybe a couple of financial companies, some ad tech. If you are a high growth investor, this is a week for you to pay attention. Before we do, if you are interested in learning how to invest in stocks and crypto, best way to start is hitting that subscribe button so you don't miss anything. Let's jump into it.
Don't ask them, what do we know? What I forgot is better than whatever they remember.
Today, I am going to show you how I research and look at companies the week that they are reporting. Things that I'm looking for, things that I keep my eye on, even for companies that I don't usually pay attention to, but that have been on my radar. Let's just jump into it. This is the earnings whispers calendar of companies that are reporting. Just move me out of there. You can see some other ones. I covered the ones that don't interest me, the bottom corner. I've circled the ones that are in green and red that I either have in my portfolio or I am interested in some way. So today, these companies reported before the market opens. So you'll see them move before the market opens in pre-hours. And then these report after the market closes. So you'll see them move in the after hours. Palantir, Lucid, him, and hers are the three companies that I chose to pay attention to. I actually don't own any of these at the moment. I have owned hims and hers and Palantir. I may have some of these in some portfolio. So let's take a look what happened. Palantir reported earnings and it's down 7.5% after hours, but it was up 8 hours during the day. So basically, it gave up the hopium the market put on it in the early in the day before they actually reported. So there was maybe some rumors, so people were or investors were expecting more than they actually delivered. So let's take a look at Palantir. Its market cap is about the size of Coinbase. Now, the revenue looks good. The net income is actually pretty weak relative to Coinbase at the same valuation. Balance sheet, Coinbase is a little better, I think. Oh, why am I comparing it to Coinbase? Well, this is how I look at any investment is I compare it to what I think is the best investment in my portfolio. So if I was to pick up some Palantir shares, that means I would have to allocate capital away from Coinbase. Or if I had some money to invest in, I don't know how much your share is, $25. Let's say I had $250. I can either buy, 10 shares of Palantir or buy one share of Coinbase. And which one do I think will go up more in percentage terms in a year or two? That's how I think about it. Price to earnings growth ratio is pretty high, so it's not growing as fast. Forward PE is huge compared to market didn't like what they saw in the earnings report, and the stock fell down. Next, Lucid. Lucid is a fun one. This is an EV company that makes cars. You might have seen some. You might not have seen this car because they only make a few thousand per quarter at best. They make about 1,900. The stock fell 8% after hours, but it was up about 9.5% before they reported. So the market just gave back what it gained earlier in the day. The numbers they reported were not that great. They produced 1,728 vehicles, and their production goal for 2024 is 9,000. That's not a lot of cars. They delivered 1,900, and their revenue was $172 million. They have $5 billion, and they just got another billion in private lending. I did the numbers looking at their latest quarter, and they lost about total of 715 million, and they produced 1,900 cars, almost 2,000. It's not okay. This guy on Twitter wrote that they're losing $75,000 per car. No, actually, when you do the math, they lost $364,000 per car last quarter that they produced, which is horrific. I am staying away from this company That is not a profitable company. They're not making any cars. The scale sucks. Maybe they'll turn around. Tesla didn't start making a lot of cars right away, and they were losing money for a while until they became profitable, just like any startups. Maybe they'll figure it out and turn it around. I am happy not betting on that at the moment. The cars look cool, but I think Teslas are still better. Next up, Hims and Hers. Hims and Hers went up 12.3% plus 3%, so total about 16% for the day. They reported a beat and a healthy guidance for Q2. On to the next quarter. They seem to be executing on all cylinders. Some of these numbers could see improvements. The revenue of $872 million. I think there's something I wanted to share with you guys with Lucid, actually. Let me see. Stats, yeah. Lucid is, about 30% shorted. If you see right here, about 29% of the shares are shorted, possibly more after this announcement. This might have been shorts covering and then shorting it right back. Hims up. Last one here. It's not reporting today, but it's at the end of the week, which is a crypto-related company called Marathon. They're involved in Bitcoin mining. They're actually up today about 18% without even reporting. So something's happening. Stock is flying up. Maybe it's because cryptocurrency prices went up today a bit. 24 hours, 7 days. You can't see it right now, but Bitcoin went from 57,000, I think, a couple of days ago back to 64. Let's see if my memory serves me right. Last 7 days. Yeah, it's dropped down to 57 and then recovered to 64. Right? Could be that the Marathon stock sold off in the last few days, and then it was down 16 and recovered. It's just tracking Bitcoin price because what they do is mine Bitcoin. Possibly won't report great earnings on Thursday because the way Bitcoin miners work, they buy equipment, which are Bitcoin ASICs miners, and they put those in warehouses where they can find cheap electricity. The two biggest inputs are, three: the warehouse, the hardware, the ASICs miners, and the electricity. The real estate, the warehouse, is a fixed cost. You spread that over many years as long as you're running your operation. The hardware, it depreciates over time. Every year, the hardware gets better, and the difficulty goes up as more miners go online. And then electricity, that's a variable cost based on if you can get it for cheap or where you source it. The way you pay for all of this is you mine Bitcoin and then you sell your Bitcoin to pay for your fixed and variable costs. Well, a few weeks ago, Bitcoin had its halving event, which happens about every 4 years, where the amount of Bitcoin that gets produced per block gets cut in half. So it went from 6.25 to 3.18. So each miner is now producing half as much Bitcoin, while all the other costs are the same. They still have to pay for the electricity, they still have to pay for the warehouse, and the hardware, actually, they have to upgrade it almost every year because the difficulty adjustment in Bitcoin means that the software automatically adjusts to make it harder more miners come online. I don't expect them to report the greatest numbers. Possibly yes for Q1 because the Bitcoin halving happened after Q1, so they may have a lot of profit that they banked, but their guidance for Q2 and Q3 is probably going to be very low, so market might not like that. Expect this to be volatile, either up or down. I can't really tell at this point, but I don't expect the guidance to be good at all, unless Bitcoin price goes above $80,000, because their break-even point was, I think, 40,000 before, that they needed to sell Bitcoin to cover their costs. Now that they're making half as much, they need to sell each Bitcoin for $80,000 to break even. This is one of the constraints that drives Bitcoin price up. The new supply of Bitcoins being created by miners has a floor price which they must sell it in order to stay operational. Now, only way the price differentiates between miners is that different miners have different costs. If you have really cheap electricity, you can sell your Bitcoin cheaper than somebody else. If you have access to cheaper hardware than somebody else and electricity, then you can afford to sell it at a price that's below somebody else's floor where they're unprofitable. If the Bitcoin price stays below the break-even price for too long, a lot of companies can go out of business that mine Bitcoin. Historically, the price adjusts because it is not in anybody's economic interest to sell a commodity below the price it costs to produce it. Last, let's take a look at my crypto portfolio. We'll just look at my Coinbase account. This is just some coins that I picked up in a few recent weeks as the prices dropped, as you can tell, or maybe you can't tell. Most of these are down from when I bought them. Uniswap, I started buying some before the lawsuit. My average price is about $8.80. And then I picked up a lot more to dollar cost average down because I believe they'll win their lawsuit, or even if they don't, Uniswap will still exist. I picked up some Matic, about 75 cents per token. It is about 70 now, I believe. And then going down the list, we have some Zcash, Near, TIA, ICP, Arbitrum, DOT, ADA, and Litecoin. I will probably sell ADA and Litecoin sometime soon to buy more layer 1 competitors like Sui. I got some Sui. Many of these I will take off the exchange. Matic, TIA, DOT, all the coins or tokens that can be staked that to earn a yield, also Solana, I will send to my cold storage to be staked. It's a great way to make passive income on positions you plan to hold for a long period of time. I am not recommending that anybody goes out and buys any of these things. This is just what's in my portfolio that I thought was cheap recently. This is not my total portfolio. This is just my recent buys. Always do your own research. Let's take a look at general crypto. Market cap is 2.34. It was 2.4 earlier today. So it's been hovering about 2.3 place. It might be going sideways like a crab for a while now. Going into May, we'll see what happens with the SEC allowing a Ethereum spot ETF. Today, SEC did issue a Wells notice to Robinhood for their crypto. So basically, SEC is suing everyone in crypto for some reason or other, and they're being pretty inconsistent with their lawsuits against these companies or protocols. Interesting one to keep an eye on here is Toncoin. This is Telegram's native coin. I've talked a lot of smack about this one before because I just did not see the volumes for it to be in the top. Still pretty low volumes relative to other top coins. I don't think it deserves this valuation. I don't know anybody who uses this. And since TikTok is being banned in the US because it has foreign ownership, Telegram might also be banned, and with that, Toncoin. So this is a huge risk. I would not put this in my portfolio. And going down the line, we have Polkadot at 8% for the week, Near 6.5%, Polygon holding steady, Litecoin down 2.7%, ICP down 5%. Uniswap down 2.6%. I think that's as far as we go down the stack. Arbitrum holding around $1. It's becoming a stable coin. And we got Sui also. We got a couple of stable coins in our portfolio now. TIA holding about $10. Thor, Rune at 5.4. Lido down to 2, down 12.74%. This is a huge drop. Lido is still the biggest liquid staking derivative out there. I'm not sure why there's a sell-off in Lido. Possibly the competition from restaking protocols. This is an interesting one. We'll look in this one further, especially for their stablecoin yield. that can be really good. Athena. Well, I think that's all the interest in the top 100 that we can touch upon. Of course, meme coins doing their meme coin thing, up 20%. Render, AI play, up 26%. So right now, the meta seems to be either meme or AI narrative. Everything else, who knows? Solana is actually having a good week, up 11.5%. This is our third biggest position. Coinbase had a bump in the day as crypto prices started to rebound, and then it pulled back to 26, still up about 2% for the day. We are hoping that it will retrace back to the recent all-time highs for our options to pay off. If you did not see my previous videos last couple of weeks, I've bet big on Coinbase options with my forecast for Coinbase Q1 earnings, which were very accurate. I forecasted $1.6 billion. That's exactly how much they made. It was one of the most accurate forecasts out there. And trusting that my forecast was good, ahead of time, I made a bet on Coinbase options with strikes that were out of money calls. The idea was to invest $6,000 to $8,000 prior to the earnings and then benefit from price appreciation once they report a stellar quarter, which they did report a stellar quarter, but the price did not move as we expected, possibly because crypto prices have pulled back in the recent couple of weeks and the market is adjusting accordingly. We have faith that Coinbase is executing well on all cylinders, regardless if our options end up being profitable or not in the next 10 days. Coinbase still remains the biggest position in the Delta Code portfolio. Rest of the week, tomorrow, Datadog. This used to be one of our big positions. I guess Disney is also interesting, but Datadog, Upstart has still very large short position. We have some Twilio options. We had Twilio shares, and we just sold them at a loss for tax loss harvesting, but we think it's a good company. So I bought some options to take advantage of possible price appreciation. I wanted to hold on to my position anyways, but selling at a loss and reaping the tax benefits was a better strategy at the time. And then Uber and Lyft are going to report. I am curious to see what investors will do, given that Tesla is flirting with a possible robotaxi idea that could really disrupt the business of both of these companies. Shopify used to be one of our biggest positions. We have sold it off, not for any particular reason that we don't think Shopify is a good company, but just needed to invest in more Coinbase because we believe in Coinbase more. Toyota is an interesting one because we're looking at cars like Lucid and Toyota recently, and Toyota is one of the biggest actual car manufacturers in the world, and they've been making EVs and hybrids, and they can easily try to take some of the market share for electric vehicles, though Tesla is throwing out this new narrative that they're no longer an automobile manufacturer. They are a AI company, they're a robotics company, but they make cars. Wednesday, after the market closes, Robinhood, who just got sued today by the SEC for their crypto business, reports. ARM, this is a chip play. Airbnb should have large growth given the pent-up demand from COVID. People didn't travel and now are traveling as much as they can, using up all the money they saved up. Trade Desk used to be one of our biggest positions. Also, we sold recently to buy more Coinbase. And then rest of the week, not many interesting companies. Marathon, which we touched up on, and Unity. Unity makes games. Used to be in our portfolio. We got rid of it to buy more Coinbase. That's what we do. We sell the losers and we buy more Coinbase. Overall, a pretty interesting week of earnings. Starting off with Hims, Hers, Lucid, and Palantir today. Tomorrow going into Datadog, Lyft, Twilio. And then Wednesday is really packed with a lot of good, interesting companies. SaaS, car manufacturer, ride share, all of these really nice companies that we either had in our portfolio at some point or are considering of adding should things look interesting or mispriced. Don't forget to like and subscribe to stay up to date on all these earnings and companies, along with my analysis of how these companies are doing and what I'm doing with my portfolio given the data. Thank you for tuning in, and as always, may the force of compound interest be with you. Peace.